Hey, how's it going? I just wanted to bring somebody else that was very special to me that I've known over the years, Mr. John Roanoke. And right now, John is at Castle Cooke, and they've got a lot of great loan programs. So we're going to talk to him a little bit about the market, what's going on with our crazy market here in Las Vegas, and we'll go over the interest rates a little bit. We're going to go through some loan programs, down payment assistance, and I didn't give him any questions before, so let's see how this goes today. Yoo-hoo.
Good to be here.
What's
Thanks,
going
Tim.
on, brother?
Appreciate it, man.
So let's give him a little history about you, man. How long you been doing loans?
Well, I quit my job in November of 2006. So a lot of people think that the mortgage crisis hit in 08,
right,
but it hit the lenders in 07 with all the programs going away. So I got in at possibly one of the worst times to get in the history of mortgage.
Why not? You just wanted a challenge. You know, right?
A lot of people buying investment properties, you know, values ended up skyrocketing at that time, as you know, and then we got to participate in the mortgage meltdown, essentially. So
oh geez, dude.
Fought through that, had a rough 2 years, but we built a great business, taking care of a lot of great people, and put, you know, hundreds or thousands of people in homes and taking care of them. So I love doing that part of it.
That's really cool, man. I remember when we met, I think it was probably more around, I don't know, 2010 or 11 is when we really started doing more work together.
Right.
And, you know, that was I mean, every market has their own environment, I mean, as far as loan programs. And back there, that was very challenging.
Yes.
You know, interest rates are different from what they were back in those days. And we've seen quite the swings over the years.
How about it, you know?
Oh, man, between COVID and, between the final meltdown on the market back in the 2008 to 2011.
Yep.
You know, then
average home prices were down to like 105.
Oh, geez, right?
That was crazy.
Dude, that was insane. I remember selling properties for like 40, 50,000 on condos, and it was crazy. Yeah. But now we're back up to a regular market again, and if you compare Las Vegas to most markets, our median price, which right now is probably around $475, is a lot more affordable than, say, you know, our next door neighbors are California. You know, they're anywhere from 800,000 to 1.2 million, just depending on the city that you live in, as the median price.
Correct. Right. And they're not even, you know, we're not even talking large homes there.
Yeah.
You know, we get a fair amount of people. They sell those homes and bring some cash and their equity, and they could buy a palace for what they're paying out in California.
No joke. Yeah, we talked to people from, say, Huntington or LA, Orange County, and for the price that they can pick something up here for 700,000-800,000, they're like, what? Really? And it just blows their mind.
Exactly. I have a friend who did that from San Diego. He sold his condo, bought a house up in Red Rock Country Club, and he's saving money. I'm like, okay.
Yeah.
You got a $1.5 million house, and you're saving money for what your condo was.
Oh man, I got a guy a property last year at the end of the year that was a 6,000 square foot home, 8 bedrooms, and I think we picked that one up for $800K. Had a pool.
All set up.
Yeah, it was 4-car garage. It was really neat.
Oh, nice.
But something like that down there in California, you're looking at $2-3 million.
You can't even touch. Exactly. Right. Most normal people can't get any of that. So
it's insane. So anyway, we've been working together for many years. That's for sure.
Correct. Absolutely.
So you know, we went over a little bit about what's going on in our real estate market. The interest rates are always challenging. You know, you go from a time period where we had the lowest interest rates in history to a time where things are trying to start to level out, right? And now they're at a section of where they're starting to come back down a little bit.
It would have been much better if we talked Friday, Monday.
Yeah. Oh man, yeah.
There was with those market crashes, we had a lot of price improvement. We had rates down into the low 6s.
Yeah.
High 5s, if you know, depending on if we could catch it just right.
Yeah.
We've given those gains back, or those benefits back, over the last 2 days, but you know, rates are in the mid 6s. When I got in 06 and 07, like I said, rates were 8, 9, 7. So you know, it's more of a normal market. It's something we're not used to, and it causes a lot of pain right now with that rate being in the 6s and 7s.
Yeah.
I think you know, we'll see if election helps, or the Fed had talked about they're going to come out and do some reductions. They said about 4 this year.
Yeah.
We're hoping for 1 maybe.
Right. Oh man.
And there was talk the other day when the markets were crashing that maybe they would step in and do an emergency. But
Which
then
that probably would have came if the markets didn't start to correct.
if we had one more 2 days of that, we would have been okay.
Right.
But we got yesterday and today, the markets have rebounded some with people buying, the low price and taking advantage of it. So
yeah, no, very true, very true. Well, okay, so let's go over a scenario with you real quick. We always want to try to do the best that we can as far as getting the best loan programs for interest rates. But the people that are sitting on the sideline, the tough thing is they're like, I just want to wait for the interest rates to come down. Well, if you do that, the problem is if the interest rates come down, here come all these other buyers. And everybody's out there together and they're sucking up the inventory, putting multiple offers on properties, and then the prices start to go up. Now it's outside of your affordability range now.
Even though the interest rates came down, right? So I've been working with a lot of people and really suggest, there's some buy down programs that could, take care of people and get them comfortable getting into a house sooner.
Yes.
But I advise people, if you can afford it and you're comfortable with the payment, and we find the house you love now, get it.
Right.
Because we can always refinance later. Right. Castle Cooke has some programs where we'll do no cost for a coming back customer, and make it really low cost to just reduce our interest rates.
What the range is on that? How far out? Like, is that 6 months, 9 months? Do you know? But we can get it for you.
Yeah, we'll see.
I know that you guys have the programs.
Yep.
But that's my point is I wouldn't wait to go out there to purchase a property for the interest rates to come down, because you have that ability with especially with Castle and Cooke, and
right.
There's other programs out there, but I'm just telling you that you have the ability to refinance it and bring that interest rate down, get the house, and then play with your rate when you get the opportunity as things go down. Because if you wait for everybody else, there's not going to be as much inventory, and you just might not get what you want. You might have to sacrifice on the type of home that you get.
Well, and with the changes on the real estate side, depending on what's being provided by the seller, a borrower may qualify for this house, but may not qualify for that house that's the same price. So,
right.
Really, again, identifying, hey, I found what I want, I'm going to get it, and I'm not in love with the payment, but I can get better as time goes down. I've also done some 2-1 buy downs with people. So
explain to them what a 2-1 buy down is. What's the basis behind it?
Okay, so it has to be contributed by the seller, so that's a little piece that's nice for the buyer. But if the interest rate would be 7% on the regular rate, the first year on a 2-1 buy down, the payment would be based off a 5% rate.
Okay.
The second year would be based off a 6% rate. And then the third year on forward, it stays at the 7%. So what's done is the money that's collected up front from the seller is used to offset that difference in payment those first 2 years.
So when we go to write a contract for you, we're negotiating for a particular amount of funds to go towards that 2-1 buy down.
That's exactly it.
Yeah, that's how it works. And I know, back in the day, what got a lot of the market in trouble was the adjustable rate mortgages. But the programs that are out there now, they're just different compared to what they used to be.
They're a lot safer than they used to be.
Yeah.
Because, I haven't seen one with a 1% starter payment.
Yeah.
And then qualifying people off that. That was just the wrong way to do things.
That was,
and that was before I got into the market, thankfully. So I didn't really get to participate or didn't have participate and have to deal with that. But it's tough on the people who got stuck and then they had big leaps and bounds. We're hearing now that the majority of the defaults that are coming or coming up over the next year are because people did adjustable rates 2 years ago when the market started going and the interest rates went up. They haven't seen the interest rates come down that they could refinance, and now they're hitting upward adjustment. So that's where they're saying. I haven't seen a lot of defaults. Have you seen a bunch of defaults coming?
No, the notice of defaults are still really low.
So
foreclosures are less than 1% of our market, and it's been that way for quite some time.
Yeah, so they talk about it. I don't know if it's stoking fear in the market or if it's something real. We'll see that play out over the next year. And my big thing is just take care of the people. If they're in a bad situation, how do we get them into a better situation? If they're in an existing situation, what do we do? I've
even heard of 10-year ARMs.
Yes.
Like, wow. No. If you think about it, if you're going to do an adjustable rate and you're afraid of what swing is going to be in the market, in 10 years, you got a pretty good shot that you're going to stay ahead of things. So I was intrigued on that one.
I do that too. And if I have certain people who an ARM fits, they're on the upside of their career, their earnings is expected to increase, things like that. And even if they tell me, hey, I have a plan where I'm paying it off in 3 years, then I suggest let's do a 5 or 7 ARM, just that way you have a little bit of protection.
Right.
The only problem with the ARMs lately is the cheap money is it's more expensive.
Yeah, man, it's really expensive.
We can't get great rates for an ARM where you'd go, hey, Tim, let's do an ARM on this guy, and know we're going to take him out of it in 5 years, so we're doing a 10-year ARM, but the pricing's so high, you're better with a fix.
It also depends on how long you expect to live in a property. So if you're only going to be in there, you think 2 to 4 years, it's probably not going to make sense for you to do it. But if you're going to be in it for a longer term, then it makes sense to put a large sum of money towards buying down the interest rate or something to that respect.
And we study that. How long do you expect to be in the property? Here's what the rate buy down is going to cost.
Right.
So if you didn't do it and you set that money aside, you could offset the payment for, if it's 3 or 4 years, a lot of times it doesn't make sense to do that.
Right.
And do buy down to that level.
Yeah, and I'm sorry, I jumped in from ARMs to straight to go into a buying down your interest rate, which is something that you can do on any loan, really.
Yes.
So you're basically putting money up front to buy down the interest rate for, say, even a 30-year fixed.
Right, you could buy it down for the whole period. I think that's great. I do that with some of the new builds that we're working with, that we're still, even as an outside lender, we're getting the builder concession. We're using a chunk of that to pay down the rate. So we're competitive with their lender, but, taking care of people who feel more comfortable using somebody who's not the builder's escrow, the builder's agent, the builder's lender, the builder's closing.
Sure.
You know what I mean?
Well, you brought up a good point, and I'm going to talk about something real quick with John regarding new home builds. On new home builds, they are specific with their own particular lenders, and they usually own the company that finances along with the new home company. So lots of times they won't use outside lenders. In many cases, they'll allow John to come in, and not every case, but it's always good to get pre-qualified with John, whether you're going to go look at new home builds or regular resales. So make sure that he's got you in that position, and then he can negotiate to be your lender at that point going forward. And you're already approved for many lenders.
I appreciate that, and we do a lot. And but the best thing is, once we sit down, we know here's where you are. Hey, John, here's what the builder's offer me. Okay, let me go through it, and let me talk to the builder, see where we're at.
Yeah.
My client needs to get the best deal. If that's with me, that's great. If that's with the builder, I will coach them and walk them through everything with the builder too, so they understand what they're walking into, they understand the process, and they're comfortable.
Yeah, so that makes sense.
I do that with people either way.
And well, either way, don't ever walk into a new home build on your own, because lots of times they won't even let the agents represent you. So make sure that if you're going to go do that, we've got a search for that's an automated search for all the new home builds in Las Vegas. So that way we can, if you're looking for something that's up to $600,000 and you need 4 bedrooms, a pool-size yard, we can factor all that in instead of you just driving around to a bunch of sites without a clue if they're going to have something that fits what you need. So we'll gather all that information and make it real simple for you to find the right product and all the incentives that they might provide. And so between John and me, we'll have you in a great position even before you want to go out looking at new or resale.
Exactly. It helps to get them, they're educated, they're knowledgeable, they have a great team with them, and it helps them get the best deal that's out there that they can get for that.
Yeah, so there you go. So reach out. There we go. So we'll talk a couple other things real quick. When the market does start to change here, I expect there's going to be quite a few people that are like, okay, let's go. Say you do go up against a multiple offer situation. One of the things that you might be able to utilize if you need to sell your home is what's called like a bridge loan. And basically what that tool allows you to do, that type of loan, is write an offer with it not being contingent upon the sale of your house. Because think about it this way, if you're a seller and you get multiple offers on a property, are you going to consider somebody else's offer that has to sell their property first? So not only are you waiting on that buyer to get qualified and finished up, but the buyer of their house to get finished up. So if you've got 3 offers, are you going to consider that one? Probably not. So what you do is you get with John and you talk to him, see if you've got a certain amount of equity in your property, then you might qualify for a bridge loan that's going to allow you to write offers with it not being contingent upon that sale. And then you can purchase that property, and then we in turn, right after that, we go there and put your original property on the market and get it sold. So
yeah, some of them, they have different requirements on it's got to be listed or sold within 12 months. Some of them have longer terms. Some of them say, hey, as long as you're going to list the property and sell it, we're good. Yeah. It helps people only move once. People don't like moving to begin with. So if they could buy that house, get in there, and then deal with their exiting house, we found a lot of success with that as well recently.
So just another tool for you, another way to go forward and put your best foot forward whenever you're writing offers. Mm-hmm. What about down payment assistance right now? What's going on? I mean, with the state?
There's still some great programs. Nevada Housing Division administers and runs a bunch of those programs. Teachers have a nice piece. Teachers program, they get about $7,500.
Is that the Home as Possible?
It is through Home as Possible.
Right.
And the other piece they get is that's one that's still forgivable. So after 3 years, it goes away. The Home as Possible and the other programs where you're getting 2 to 5% down payment and closing costs towards your home, those now aren't forgivable anymore. Okay. That kind of went away. So, and you don't have to make payments like you're doing a second where there's payments. It's just if you refinance or if you sell your home, that's a note that's going to have a lien on the property in second position that you have to pay.
Okay.
So it's not quite free money, but it's free money for a while.
Right. It's usually on your first time home buyers that are going to be able to qualify for these. The state has their own requirements, or the loan program has their own requirements that you have to meet, like specific FICO scores, DTI, that kind of stuff. And so do the lenders. They have their own overlayments on top of it, or overlays.
We go right to the housing division. So we don't have our own internal overlays on that. So, it's nice. It works really well. It's really low impact on the borrower to get the funds. All they do is take a class online. So that's their education piece.
How much can you get right now? Is it?
And right now you get up to 5%.
5% of say you're going to purchase a $600,000 property, that could be 30 grand. And that 30 grand can go towards your down payment, and it could go towards your closing costs. Or buy down or whatever.
The housing division doesn't really let you buy the rates down. They come out with their fixed rates based on the money, the way it was allocated and it was given to them.
Yeah.
So it's nice. So it'd be nice if you could buy the rates down. In the past, it had typically been where the housing division programs were a little bit higher than normal market rates because you were getting free money. Yeah. Nowadays, lately, they've been as good or sometimes better than our market rates, just depending how you catch it. With all the volatility in the market, it's the stock market, it's the housing market, it's the jobs market, it's pretty much every market. So things don't work like back in the 80s and 90s with the symbiotic relationships to different industries. Now it seems money goes in one place, people get scared, and it comes out of everywhere. So it doesn't necessarily mean if the stock market's going down, our rates are getting better. It just used to be a lot more predictable.
Right, yeah.
So now we wake up and get to deal with what we get. Surprise!
So more importantly, it's important if you're going to be buying a home coming up in the near future, John, if you've got him looking out for your best interest, you could tell him, okay, this is where I want things to be for me. I'll qualify best at this particular rate. If it comes down 0.5%, John, give me the heads up. He could track things and go, okay, we're looking in a good spot, but you have to have all your information in order for them to be able to lock you into a particular rate. You got to have a home so we could go jump quick in that respect. But my point is just make sure that you get pre-qualified with a lender, even if you're 6 months out, 9 months out, because then they can keep track of things.
That's a huge point. I have a girl I just started working with last week down in Arizona, and she's not going to qualify and look to buy until June or July. Okay. So she's almost a year out.
Yeah.
But we found out, I have student loans that I knew I had the student loans, but I didn't know the payments were due.
Yeah.
They didn't send it to my right address. So she's fixing stuff now. In about 6 months, if you have the money, there's a lot of stuff you could fix on a credit report.
Oh, right.
So that's why the sooner the better.
Yeah.
You know, even if I'm just thinking, hey, I'm going to buy a house next year, I want to make sure what I look like. You know, the credit pull is going to hit 3 to 5 points for, you know, the inquiry, but that comes back pretty quickly. And you know, people with good credit or people with challenge credit, you know, both, it makes sense to do it earlier, because once we have that credit report done and we know here's what you look like, and I can tell you here's what you're going to be shopping for in this range, you know, we're able to hold to that. So that's what I really like about it.
Yeah, it's not like you have to supply everything, but some of it's enough to where, like say your income statements, your bank statements, your tax returns, enough so that John has a transparency in his mind of which loan program is going to be best for you. And so he's just keeping track of things for you going forward, so that way when we are ready to put in an offer on a place, you're ready to go. You're almost as good as cash going forward. It's still, now that first, I will tell you, this is a part that people don't understand is when you get your pre-qualification up front, that's not a guaranteed approved, fully approved loan. There's stages of an approval. So
right.
You want to explain?
And I really don't, I mean, pre-qual, a lot of people will talk to someone over the phone, they'll take stuff over the phone and run their credit, and if everything looks good and it runs through the underwriting, they'll go ahead and issue a pre-approval letter.
Right.
I typically like to have a full understanding of the situation, so I want my people, even as simple as driver's license, social security cards, so we don't have to ask for that later. I want to see 2 months of bank statements, so I know where are your assets, or are they in a 401k? Like I have a guy today, we have to help him with his terms of withdrawal. So what do we need to do to make sure he can get the funds he wants to close from where he wants to get them from? So that's the biggest piece that you know, open communication with realtors and with the client really helps. So
as you go through an escrow, usually we usually put about 21 to 25 days for a fully approved loan in our contracts. And a typical escrow is about 30 days. What are you guys looking at right now to close? I mean,
we asked to quote on that for the contingencies 14 and 21, 14 on the appraisal, 21 on the underwritten approval. But I typically am ready to close and have people sign and fund inside 20 days.
Okay.
Because we get everything up front. So typically when I get the contract, we'll need an updated pay stub or two, or we'll need one more bank statement if they got it. But you know, I have the tax returns, I have everything analyzed, ready to go, and all the questions are answered. So when they're out shopping, we know they're a deal.
Right, right. If they wanted to go forward right now and just see where they're sitting, say they're like, I don't know if I could purchase a house.
Yep.
So what's the best way for them to apply for Castle and Cooke? Is it to go to your website, or is it to go to?
The best way would, you know, call me first.
Yeah.
So that we could find out what the best way to receive theirs. We have the web application that I could send an email and they could click on the link there. For other people who are comfortable on the phones, I have a full application that they could download. There's payment calculators in there. They can take pictures, upload their documents, so it's all done securely. So it really just depends on the level. And if they're somebody who says, I deal face-to-face and I want to print off my stuff and come to your office, we accommodate that as well. I like those a lot, you know, because we can sit down with the people, everyone's comfortable, we get to know each other a little bit.
And then you get a lot more information as people start to talk through their scenario, then you're able to see
it's not so mechanical and digital, even though we live in a digital world.
Right.
It's nice to get something where there's some interaction instead of just binary da.
Yeah, sure. At the same time though, if you want to get pre-qualified real quick, how long would it take them to get a response back if they sent in a pre-qual online?
If they send it in online and give me their documentation, it's typically done same day.
Yeah.
It's only a couple hours, you know, it just depends on what the schedule is. I have a son who does baseball, so if I got to run the baseball, what am I doing while he's there? So we can push out an approval at night. We're in Vegas, it's a 24-hour town.
Yeah, so. He's done that a few times while he's out at events. He's like, hold on a second, Tim. Let me send you a link real quick. And okay, yeah, we're good. Yeah. Anyway, so if you guys have any questions for John, what's your telephone number, brother?
702-743-5817 is the best number to reach me at. You can call me, text me anytime. The only time I don't answer is if I'm asleep, actually. So we don't get to do that often.
Right. Yeah. So anyway, that's the latest and greatest from Tilo and crew, and John Roanoke at you. And call them if you have any questions. On that note, keeping you guys in the know. Talk to you soon. See ya.